Sandeep Bhatia is Managing Director and Head of Equity India at Macquarie Capital. Sandeep, good morning. Great to have you with us here. Our first chat this year in 2026. So wish you the best for this year. Appreciate it.
Happy New Year to you and all your viewers.
Thank you, Sandeep. You've been cautious for a while now, Sandeep, and I think that cautiousness has been, I dare say, well rewarded. I mean, if it has rewarded your clients. What's the view now, Sandeep? I mean, when we flip the page onto a new year, generally there is hope that maybe, we will avoid the worst of the previous year and things will get better. But will they? How do you think about this question?
I think important question at the start of the year. So I've been traveling and talking to a lot of clients globally and of course in India. So, there are two thought processes. The domestics are hoping we have a better year than last year. The domestics remain concerned about the IPO market. They see a flood of IPOs. They see valuations to be high. And they see that that is definitely one part of the market which is very frothy. The domestics also expect stronger earnings growth. I'm also in the camp that we'll see better earnings growth than last year. How much still to be seen? India generally always disappoints in terms of expectations versus reality. So while the earnings growth may be better than last year, it may still not be as high as what the analysts may be penciling in at the beginning of the year. I would think a 12% return on the market is what we should start the year with. But there are various trends outside of India which are very important. So when I was in the US and talking to clients there, the conviction on interest rates in the US to come off this year, continue to come off this year, the conviction that the AI story is still not done, that we have at least, if not more, to go through. The conviction, therefore, that in Asia, the entire AI story, which is played out in China and Taiwan, so these are better places to go to versus India. So definitely the foreigner flows, I don't see, at least in the first half, coming through in any strength. So there would be the continuation of the same trend, which is the domestics continue to buy, IPO markets being frothy, earnings growth may be better, but not really a big surprise, and the foreigners continue to sell. So these are the broad underlying trends this market will face in the first half of this year.
Sandeep, 6 months back, you said India is in a slow burn phase, and that's played out. Now, looking ahead, how would you categorize the market and what would be the expected return now from India? Because we've gone through a period of consolidation, given all the factors that you've said.
I think India stands out in one respect. While I gave you the negatives, what the international investors feel, India stands out in one respect is that it has political stability and it has a higher growth rate than the rest of the world. In this budget, I don't expect any big tax announcements. We have seen tax announcement on income tax and on GST last year, and I don't think that there are any tax cuts coming through. I would think there would be more emphasis on capex and build India, manufacture in India. These are the themes that should be pushed in the budget. So manufacturing India, I think, would be interesting to see, and the widening of the market that we are seeing with the IPOs, despite the fact that I just said that the IPO market is frothy. The good thing is that the IPOs are bringing new companies into the listed space. So that is something which is positive. To that extent, I think India looks better. In the near term, I would think that we hold these levels unless there is a big negative event elsewhere or in India. But we need some more time before we see a strong run.
Okay, all right. Hi, Sandeep. Good morning and good to see you. And you're sounding a little bit more optimistic, according to me. 12% return on the index, earnings will pick up, and at least we hold on to these levels. Sets us up for at least a better showing in 2026 in a relative context. When we spoke, I think around 4 months or so ago, when we spoke about the tech space in particular, you said that people need to have maybe a 3-year horizon. I'll tell you what, the next 3 months, actually, tech did outperform after underperforming for a goodish bit. What's the view on tech right now? Because some of the stocks have bounced off the lows. Growth still remains, far away. I mean, growth will be very, very subdued out here. But there is some optimism that there is some valuation comfort and things will pick up. We have earnings in the next few days. What's your view on tech?
I think tech earnings will not be very positive, but that is something which I think everyone knows. So I don't think that is a negative surprise for this market. I will be in China in March and meeting companies in the entire AI and smartphone, EV, battery space. Maybe I will be better informed then. But the fact is that in the near term, tech will just hold these levels. No big reason to expect, at least in trading terms, a big run up. There are fundamental questions on the entire tech space. I don't think it is going to be as bad as most people want to say on social media and so on. But I would just wait for at least this quarter earnings to come through.
And the top theme would continue to remain the top banking names, financials and banks. I think that's something that we're optimistic about, right?
Correct. And I would think look at stocks which are large cap, which have come off. So HDFC Bank, you were just highlighting how it's fallen off. So it's probably a good time to look at these names when there are such big divergences. Reliance has come off. So that would be definitely, but don't expect like 25%, 30% returns. If you get to 15% return in the near term, then you take it and be happy with that. That's the way I see it. Large caps and stocks which are fundamentally okay but have come off, and this market always gives you opportunities. So that would be a good way to look at it. Maybe look at even at Voltas. We had everything going wrong with the entire air conditioning space with a prolonged monsoon and so on. We are in the middle of winter, so no one's looking at this name. But if we have a really hot or even a normal warm summer, then all these stocks can come through. So that's the way to look at it. Look at what's getting beaten down, not from very good reasons, and that's an opportunity.
Got that. By the way, 1,500 stocks are lower and about 990 stocks are higher. So it's definitely things are under pressure. If you can pull up Reliance, right? I mean, I think it did break 1,500 at the day's low today. Got to about 1,496. So from 1,620 levels, we've seen a sharp fall in just 2 or 3 trading sessions on this one. So, that is a heavyweight, outsized influence, and of course what the Nifty will do, or other indices essentially will do. Just a few other names, right? I mean, in terms of where we are seeing some amount of pullback, let's just look at stocks with volumes as well, right? Vedanta is down 2, so it's metals basically. Metals, but such an outsized run over the last many months. Vedanta is down 2, Hindustan Zinc is down 4%, Nalco is down 3%. Hindustan Copper, of course, is down as well. IEX is the other one. So much frenzied trading action day before yesterday. As that hearing was going on, yesterday was up 2%. So basically, I think today's 2% is not even a reversal of yesterday's move. All these silver ETFs, etc., are down because silver prices pulled back about 3% last night. So that's the other pack. Natco is another one which is down about 2%. As things stand. So that's the picture. Panacea Biotech, I just want to highlight, doesn't come up on our list very often with volumes, but that's up 8% right now and almost 1 million shares traded. I wonder what's going on with this one. That's largely a company into vaccines. So we'll try and find out if there's something afoot as far as Panacea is concerned. MobiKwik is up about 6%. All these, Balaji Amine, Alkyl Amine, I think we highlighted this 6%, 7% respectively. So enough and more price action. Camlin Fine is another one. Camlin Fine is up 8% right now. So, there are these individual moves. So I was talking about jewelers, right? Look at Senco, which is up 4%, and Thangamile, which is up 6%. And we should pull some of these up. Actually, Senco is the number 1 volume-led gainer on the NSE. Thangamile is number 2. So 4% and 6% respectively. So continuation of some of these moves that we had yesterday come through. So that's the broader picture. Sandeep, the individual kind of moves, especially on financials and any part of the financial space where you think it's a consensus kind of overweight. But I don't remember a point in time when financials was not a consensus overweight. But you think it'll do well this year, and which pockets particularly?
Well, I think look at some public sector banks. Private sector banks have been gaining market share, but I think now the public sector banks, given the broad macro structure, I think even India will see a continuation of falling interest rates, given our very good macro fiscal situation. We have seen all the bad news come through. There was some worries about the US trade deal not happening, and the fact that that would result in small and medium enterprises, facing headwinds, and the banking sector then seeing higher non-performing assets, NPAs. All that seems to have been managed well. So I think look at State Bank of India, but I would still think look at the larger financial businesses, high quality names. And again, in a 12 to 14% market expectation that we are running with, the banks will continue to deliver on that ground. So that should be fine. The real challenge, I think, is, again, this year is different from 26, is going to be different from 25. We have a lot of political noise coming through this year. We have big elections in the first quarter. That could have an impact on the markets, depending on how things fare for the ruling party. So to that extent, be aware of some of the political dynamics, which is going to be quite interesting in this year.
Which politically, you mentioned elections, right, Sandeep? Which ones?
Yeah, we have state election in the first quarter, right? We have West Bengal, we have Assam, we have Punjab.
Okay.
So we have these big elections, and BJP.
I thought you were referring to the elections in local elections.
Yeah. No, not the BMC elections. That's also important, but anyway, that can't have such a large impact on the markets. I think the combination of all these larger states, most of which are ruled by BJP, is an important data point for the market.
Okay. Let's just put up the Panacea stock, right? Our colleague Hormuz and Sudarshan, of course, are saying that the news is that, Panacea Biotech, they're working on a dengue vaccine, and enrollment of study participants for the vaccine for phase 3 human trials has been completed. Now, and that's, I guess, why the stock is up 8%. But I just want to say this, right? This was well anticipated. This was well expected. And our colleague Timsy in Delhi, I remember this, by the way, this enrollment was supposed to be completed in October last year. So this is delayed. But the timeline is important, right? It's a story. You can go to the CNBC-TV18 website and check it out. So after the enrollment, etc., is done, right? The sources in ICMR had told Timsy that trial subjects will be under a critical 2-year follow-up, which will continue till the end of 2027. Only after that can Panacea move forward with a formal application for authorization. So I just want to kind of put that out, that this is the story our colleague Timsy. So there's excitement here because the enrollment has been completed, but the timeline is 2 years away from now to when they can actually apply for authorization. I just want to kind of make that clear. So keep that in mind. Sandeep is with us. Sandeep, on budget, which is the more is the nearer kind of queue, do you expect anything? State finances, etc., have been under pressure. You saw this move on tobacco taxation. Do you think we will see more that kind of action, attempts to shore up revenue?
I think tobacco taxation is not shoring up revenue as much as I think taxation policy on the tobacco sector has been very, very mixed. We need a constant, stable taxation policy. We have just ups and downs, which is actually not good for revenue generation. I doubt that after this tax increases, we'll actually have higher tax collections. So if you think that tax collections are going to be bumped up by 30% plus tax increases, that's not going to happen because you'll see a volume decline. But coming to your underlying question, which is on the budget, I think this budget essentially, as I tried to highlight, is going to show the manufacturing sector as a big thrust area, and therefore this is something which is going to be interesting to watch. I think this is definitely required. The underlying trend of China, pushing its exports to the rest of the world, given the largest market, which is the US, is seeing issues. We will definitely have a big challenge in all of Asia and India. to see its manufacturing sector survive. So there are big underlying structural challenges because of the conflict between between US and China, and India will definitely have to see policy improvement, and budget will focus on manufacturing. And also, I think public investment, capex, which was actually the capex investment, which was 10% last year. The budget numbers could see higher numbers in terms of public sector investment in infrastructure.
Okay. You spoke about Voltas as one of the stocks. We spoke a lot about large caps, HDFC, Reliance, etc. But which are some mid caps which have been beaten down too much, which could make a comeback this year?
Well, mid caps, I didn't touch on them specifically because I think this is a large cap year. And on mid caps, you need to know the management and the competition very well before you get in. So I would not want to recommend mid caps unless there is a specific, especially for retail investors, they need to be more clued on mid caps. So I would stay away from mid caps right now.
Sandeep, great chatting with you. Thank you very much for joining in. Wish you a very happy and a prosperous 2026. And for our own markets, 12% return possible. Markets could hold on to these levels, but this could be a large cap year, and maybe some of these stocks which have been beaten down might deserve a look in.